As we head into tax season, 2026 is bringing a tax landscape that looks familiar, but it does have some important details retirees can't afford to overlook. In this episode, our host, Steven Sabo, breaks down the must-do tax preparation steps for those nearing or already in retirement. We'll discuss RMDs, Social Security taxation, deductions, and the smart moves that can help you avoid costly mistakes. You're listening to Next Chapter Living. Steven is a financial advisor with Executive Financial Group, and you can learn more at executivefinancialgroup.com. Steven, always a pleasure.
Yeah, it's always a pleasure to get together with you for these, Alyssa.
I have to say tax season is my least favorite topic.
I'm telling you what, you and me both.
Okay, good.
It's always, it's a strange time of the year for us. I mean, things start to pick up after the holidays, which is a good thing. Spring is coming. Everybody's excited. Yet at the same time, we are entering the dreaded tax season. And so, it becomes one of those times where it's like, it's just everybody's, and I get it, everybody's all over the place. Everybody wants to get their taxes done. And yet it becomes a crazy time of year. So
I'm going to go on the record and say the government knows what we owe them. Just send me a bill. You send me a bill on everything else.
Yeah,
Just send me the bill.
We could have a whole separate episode about, that whole situation. You're totally right. It's like you have to do your taxes, and we know if you do them wrong. Yeah, but we won't tell you what you owe. But it's like, oh my goodness.
But we'll charge you a ridiculous interest rate if you're wrong. Yeah. Don't mess up. By the way, I feel like it's a test. Like it's a test that I'm designed not to do well on.
They are intentionally tricking us on this, and it's one of the most frustrating things in the world. And unfortunately, I don't know that it's going to be solved anytime soon. So.
No, unfortunately, I'm in agreement with you on that. So with that in mind, we will try to help people the best we can with information. Talk to me a little bit about what are some of the things for this tax year. We're filing for 2025, but there are some new tax changes that have come into play. What do we need to be aware of as we head into this filing season?
Yeah. So, there are a lot of different things to be aware of. One of the things that we kind of have queued up here is the 2026 tax cliff. From the first time that Donald Trump was the president back in 2017, they passed this, the TCJA, and I believe that's like the Tax and Tax Cut Jobs Act, something along those lines. And back whenever they passed it, there was supposed to be a sunset provision where those fell off starting January 1st, 2026. That didn't materialize. Congress extended that. And so we still have some of those lower tax brackets, 37% being the highest, and some of the lower tax brackets are still in place. So you don't necessarily have to panic about it. But, there are still some things that you kind of have to prepare for and get ready for, and standard deductions are a little bit higher, which is a good thing for people. So married filing jointly, it's $32,200. And for single, it is $16,100. And then head of household, I believe it's like $24,150. So I have to refer sometimes to my handy tax guide here.
See, that makes me feel better if the money guy has to refer to this, has to refer to the cheat sheet to know the numbers, then I'm not too tab.
Just way too many things that they expect us to remember all the time off the top of my head. And believe me, people, I know what I'm talking about, but they change these things so frequently. Congress likes to create these tax plans that are going to mysteriously kind of expire by the end of their term so that somebody else has to deal with it. And, so they're constantly playing games and things are constantly changing. So yes, I do refer to my handy little tax guide here. It's got all kinds of great information on there about deductions and things like that. So
I would much prefer my financial advisor to refer to the tax guide than guess.
You know what? I tell people all the time, if I can't remember it off the top of my head, which happens frequently, I say, hey, look, I just gotta, let me get my information here straight. I'd rather tell somebody I'll get back to you with an answer, than give them something that's incorrect, especially with taxes.
Sure.
Unfortunately, what happens a lot is you give somebody a piece of information, they go and do something, and whether or not they heard it right or they remembered it correctly, it always comes back to, no, you told me this and that's not right. So I'd rather say, hey, look, let me make sure and get you something in writing than give you incorrect information.
We know that there's an additional senior tax deduction as well. Can you talk to me a little bit about that?
Yeah. So, for seniors, and I am going to refer to my guide here, but for seniors, they get an additional 65 and older, they get an additional standard deduction. And so if you're 65 or older or blind, which is a strange thing, but you get an extra $1,650 if you're married. If you're 65 and older and blind, that kind of doubles. And then there's also a bonus exemption of $6,000 for a single person or $12,000 for a married couple. So the standard deduction really starts to add up for some of our senior clients. And so we have a lot of people asking. We just had a lady the other day ask us about, she moved and sold her house and she donated a bunch of furniture and itemizing and what receipt should I be keeping? And, we donated this and, we love that people do that. And we love that, people want to help and donate and do things like that. But, it kind of becomes a pain in the rear to keep track of all those things. And so now with that standard deduction, normally we tell people, hey, look, you can keep these things and, we'll take a look to see if it's going to benefit you in any sort of way. But that standard deduction is so high, especially for senior people anymore, that that was kind of the point to get rid of that itemizing so that there isn't so much confusion and there isn't so much to keep track of anymore. So the standard deduction really helps.
And this new bonus deduction can also help when you're talking about things like Roth conversions and moving money from a pre-tax account, paying that tax and moving it over without bumping you into a new tax bracket. Would you talk on that point just a little bit?
Yeah. So, whenever we're working with somebody on a tax plan, one of the things that we're going to do is look at where your taxes are now and where that next bracket is, because that's going to be important in that Roth conversion planning, right? Whenever you do a Roth conversion, you're taking regular taxable IRA dollars and you're converting them into non-taxable Roth dollars. But at the time that you do it, you pay taxes on the conversion. And so some people, they like to go the route where they pull the Band-Aid and they do it all at once. But if you're converting a large amount, that may not make sense because it's going to bump you into a really high tax bracket. So especially if you're taking Social Security or something like that, you may end up paying more on your Social Security. Your Medicare may cost you more because of that. And so we want to look at where you are in the bracket and how many dollars can we convert now to keep you under a certain threshold or a certain limit. And, we may be looking at a conversion over many years. This may be a 5-year process that we're converting because we don't want to push you into that next bracket and cause your Social Security to be taxed or your Medicare to cost more. There's all sorts of little taxes in there, especially for seniors, that they kind of throw at you. Everybody thinks you get into retirement and, oh, look, life's gravy and I'm going to be in the lowest bracket. And you got to work hard for that. Unfortunately, there is a lot of planning that needs to be done because they look at seniors as the people with the money and they say, well, we're going to get you at every turn that we can. So it's important to do that. And Roth planning is a big part of that for us, because, having that tax-free income in retirement is really kind of an important thing for them.
Another factor that we have to take into consideration as we're heading into tax season, whether it's, from last year's or maybe we're stepping into the first year of needing to claim an RMD, and that can change our tax bracket.
Yes.
Talk to me about what retirees need to be thinking about as they're doing their tax planning for the year. Yes.
So RMDs, they are a big part of tax planning. A lot of people don't think about it. And, a good amount of our clients that that aren't using their IRA dollars, right? Maybe they have some pensions and their Social Security between them and their spouse, and, their budget's low and they don't spend a whole lot. So they maybe aren't taking money out of their IRAs. And then we have the dreaded RMD, right? And so now that was changed. The old age used to be 70 and a half. Now for most people, it's 73. And we're starting to get into 75 for some people. I believe it's after 1960 is the year for 1960 or later. Now you're at age 75. And so you're required. The IRS has a calculation. There's a table, and it depends on how much is in those retirement accounts, and your age is going to determine how much you have to pull out of there. And so that can be a big thing, especially if you're taking income. If you're taking income from your IRA, then maybe you have already kind of taken care of the RMD, right? If you've taken out that amount, then you're okay and you don't need to worry about it. But if you haven't, then all of a sudden, and you say, oh gosh, look, I've got $25,000 in an RMD that I have to add to my income this year. What is that going to do to my taxes? How is that going to affect me? And you need to take it, because if not, then you're going to be penalized. And it can be 25%. It can be lowered to 10 if you correct it in a reasonable time, but it's still a pretty big penalty. Plus, you're already taking money that you may not want.
Right.
We have a lot of clients that don't want their RMDs. They don't need the money, but they're forced to take it. The government wants, their piece. And so there are some ways to kind of get around that. Qualified charitable distributions are one way. They allow you to satisfy that RMD without kind of realizing or taking the money. You can kind of do the qualified charitable distribution, and it allows you to get it without increasing your taxable income. So,
do you like to sit down and look at asset allocation as part of tax planning as you're coming to the end of the year and sort of recapping? Or is that something that you save for the end of a year, start of a year? Is that a hand-holding process?
It is kind of a hand-holding process, and it's a little bit different for everybody. The sooner that we can get it done, the better, because obviously sometimes you get to a certain point and there may not be enough time to plan correctly or to do the things. A lot of tax planning, we're doing something now to benefit you in the future. So if you wait until the last minute, you may not see that benefit immediately like you wanted. It's important to plan a little bit ahead of time so that we can kind of get out in front of that and say, hey, look, here's what's going to happen once you reach this age. We got to plan for that now so that we can avoid some of these things, or so that we know what it is, and not only that too, every company is a little bit different with how they allow their RMDs to come out and what the deadline is for you to take an RMD for a client. And so when you're scrambling at the end of the year and there's holidays and there's the craziness of all that, and these companies are so swamped, it can become a problem dealing with that if we don't take care of it up front. And so, unfortunately, we've had situations where it's like, hey, we give you a call back in August and say, look, we need to take an RMD. We need to kind of plan for this. And then all of a sudden November, December comes and they change their mind, and now you're scrambling, and it can become a headache. And so planning for that up front, we like to do it ahead of time rather than waiting until the last minute. Doesn't always work out that way, unfortunately, but we really do like to try and plan ahead on those things.
When it comes to tax preparation and filing for our taxes, certainly, sitting down with your CPA is part of that. But what are some of the things that you want to make sure retirees don't overlook to include as part of their tax planning? Because as we said, Uncle Sam's sitting there waiting for us to make a mistake or leave something out. We know that we need our 1099s, but what are some other checklist items that we want to make sure that, we've checked the box and have our documentation?
Yeah, there's, like you said, the 1099s, any of your interest statements. It's funny, banks, when your money's sitting in the bank, unfortunately, the old savings accounts, they don't pay you a whole lot. But, even if you had $15 in interest, Uncle Sam wants to know about it. Yes. And so, interest statements, the 1099s, some people have, again, mortgage interest isn't as big of a thing anymore because of the standard deduction is much higher, but the charitable deductions, there's, making sure, I'm trying to think of what else that we have. People that have trusts and things like that, they need to make sure that those are done. K1s are a certain type of tax form that people might get from certain types of investments. So, we want to make sure that you've taken your RMDs, that you have all the correct 1099s, that you have all the documents that you need. In order to, and some people, they want to get their taxes done as soon as possible, which I understand, but sometimes these things trickle in a little bit later, interest statements, things like that, that they kind of trickle in and you may not get to until later. And if you've already done your taxes, then you got to go back and amend them. So, just making sure that you have everything from the previous year, if it's going to be the same. And then if there's anything new, if there's any more accounts that you've taken money out of or anything like that, we want to make sure that you have all that information before you go and get them done.
The benefits of smart tax planning don't stop at filing. It will follow you all year round. So yes. The more intentional you are with your retirement taxes, the more control you keep over your income, your lifestyle, and most importantly, over your future. If you're ready to write the next chapter in your story, you can head on over to executivefinancialgroup.com to schedule a complimentary consultation with Steven. Sit down and discuss your individual situation and your individual goals. You can also find them on YouTube and Facebook. And of course, be sure to subscribe wherever you're listening so that you never miss an episode. Thanks so much for tuning in.
Yeah, thank you so much. We really appreciate it. Come check us out and ask us your tax questions. Believe it or not, as much as we don't love this time of year, we have some answers. We'll get you answers if we don't know it right away. And, we'll make sure that you have everything that you do need in order to file and have them done correctly.
Fantastic. Again, that website is executivefinancialgroup.com. We'll see you next time.
The opinions expressed by Steven Sabo and guests on this podcast are their own and do not reflect the opinions of this podcast station. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Investments involve risk and, unless otherwise stated, are not guaranteed. Past performance cannot be used as an indicator to determine future results. Any strategies mentioned may not be suitable for everyone. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for you. Before acting on any information mentioned, please consult with a qualified tax or investment advisor to determine if it is suitable for your specific situation. This program is designed to provide accurate and authoritative information with regard to subject covered. Investment advisory services offered through Virtue Capital Management, LLC, VCM, a registered investment advisor. VCM and Executive Financial Group are independent of each other. Pennsylvania Insurance License number 670429. Any guarantees mentioned are backed by the financial strength and claims paying ability of the issuing insurance company and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Steven Sabo and/or Executive Financial Group are not affiliated with or endorsed by the Social Security Administration or any other government agency.